guys, it's your boy EURGBP here, and today I want to do a video for you. Actually, it's a comment. One of you gave me a comment on Instagram to be doing some top-down analysis. So today I want to share with you my EURGBP setup or trade that I took last week, which achieved around 1 to 32 risk reward. So as you know guys, as a retailer, one of the most important things you need to look for whenever you are taking a trade, or one of the things you're supposed to tweak in your strategy is the risk reward. That will really affect, that will really help you with the P&L. For example, let's say if your strategy has a 60% win rate and your risk reward is 1 to 2 or 1 to 1, you can see overall after some time, let me just share with you. Let's say your risk reward is normally 1 to 1, meaning you are risking 1% to get 1%, or you are risking a particular percentage of your account to make the same. That will require you to have a really high winning rate in this industry. But if you have at least, let's say, 1 to 3 risk reward, meaning you can lose 2 trades, you can take 3 trades, lose 2, but you're still profitable. So I'm really a fan, and I really encourage the high risk reward trades. So I'm going to try this, my first video, I believe so. So no, it won't be one of the perfect ones, but I'll share with you. So overall, EURGBP, you can see we are in a downtrend. We have a high, a low, higher low, higher high, higher low. And most probably what we expect is to see an higher high. So that is on a 1 hour time frame. I normally start from the daily, but since this one was a day trading or a lower time frame trade, I don't need to go much into the daily. But from the hourly, you can see that we are overall in a bearish trend. So we'll be looking for sales only. They say say, or it's common that normally go as opposed to go with the trend. So I'll narrow down for 30 minutes time frame, and if you can see, just to compress my chart, you can see that we have already experienced a downward pull. So whatever we expect is a retracement, and I don't use fib much, but for those who use fib, if you pull your fib from there, from the high to the low, you can see that the price has reached to around 72% level, which is a discounted rate where we would like to take our sell. So why I was expecting a sell at this zone, if you look at the left, we saw some like a trend line, which is a liquid. So like a trend line is a pool of money or a liquidity trap here. So on Wednesday, just go to a 15 minutes time frame. On Wednesday, this was the price action. Let me just add the rest of it. On Wednesday, this was what I was seeing on the market. We tapped the 78% level, and that happened at around 10 New York. So I was waiting for the price to react to that level, and then I'll wait for a confirmation to take a trade. So the price tapped there, then it went low. Didn't take any trade there, so I narrowed down my order block. When the price had tapped to my POI, or my point of interest, this order block was, I believe, in minutes time frame. So this is where I drew my order block from this week. This was the last bearish candle before the market moved downwards, so I marked that as my point of interest. And the time of the day is also very important. That was happening at around 10-11, which perfectly aligns with my strategy. So I didn't take the trade at a go, but I selected my POI. So we are in 15 minutes. Let me move this somewhere. We are in a 15 minutes time frame. I marked my point of interest. So since this one was a trade that I was not expecting, or I didn't intend to hold this trade for long, so my expectations or my TP was also realistic. If you now run to a 5 minutes time frame, there's nothing fancy, but we still stick to our POI. You can see that the market came on a Thursday. On Thursday at around 3 London, or during London Open, the market tapped into our POI for the first time here. I was actively watching the market during this time, so I wanted to see a confirmation and a re-entry for me to open a position at that level. So when it came here at first time, there was no market structure breakout or the BOS, so I didn't take any trade yet. So the market came to my refined POI on Thursday, London Open. When it came here, you can see it tapped, it came down, but there was no market structure breakout, so I was still waiting. It came down and cleared out this high, which I was still keenly looking. So whatever I was expecting from, or my thought process during that time, was I was expecting to see some form of distribution to happen, and that some sort of distribution before I could take a trade. So when the market came up, there was a break of structure. We had a break of structure, so I was waiting for some confirmation. And if you zoom out well, you can see that there was a imbalance from this candle to this candle. You can see there was an imbalance in this market. We had an imbalance there, so I wanted the imbalance to be filled, or at least to be filled 50% of it to be filled. So I also marked my imbalance on a 3-minute time frame. So after the break of structure, you can see there was a bearish move, and to be honest, I didn't capitalize on this, or I didn't enter any trade there. It retraced back to the last bullish candle before the break of structure, which to me this one was a smart money trap. And see, if you're trading smart money, this was the last move before the structure was broken. So to me, I didn't take this simply because above it we had an imbalance. So whenever there's an imbalance above or below our point of interest, we normally wait for the imbalance or for the gap to be filled. So I didn't take any trade here, and if there were smart money traders who took some trades here, probably they're into be here, or let's say extreme, somewhere with the stop loss just they could be wicked out. So sorry for that. That happened at around 5 in the evening. I didn't take any trade simply because I had a pending order exactly at 50% of this imbalance. And see where my line is. That's where I had my pending sell limit order there with the stop loss slightly here. So why you normally see catch and capitalize on these high risk to reward trades? They normally refine our entries. So if my entry was 50% of the imbalance and my stop loss was to be just above this week, so the market came here, it went down, and I almost lost hope. I thought like the market left me. So I left my chart, but I left my pending order, 50% of the imbalance. And then I went doing my stuffs. So if you can see, if you go to our 1-minute time frame, and the imbalances are normally, they act like magnet to the price. So you can see this is where we missed the move. This is our imbalance, and the market retraced down, didn't break the lower low, but it started coming up. Then it came and tapped into our point of interest, which was the 50% of the imbalance. As you can see, this was our 3 minutes imbalance. The 50% was there, and our stop loss was to be here. So if the market will pass this zone, and maybe past this zone, we could say we were wrong, and I was not willing to enter any trade there. So that's why I narrowed down my stop loss to that zone. So coming to the 1 minute, you can see that it tapped into our imbalance 50%, and our trade was triggered somewhere there. Our stop loss, let's see how much was our stop loss. After our order was activated, I kept my stop loss there. Of course, I wasn't doing the chart during that time. I just left a pending order, and then it tapped to our point of interest to the pip. You can see our stop loss was 2 pips. Then our target, this was my target. I'll show you my target from the 1 hour. So after seeing all this move, after creating a lower high, the market retraced so fast, and there's a big imbalance left in the 1 hour. There's an imbalance left here. So my take profit for my sell position was to be here. So in case there was any order block here, normally the market will react from this order block. I only want to run on a, let's say, 1 to 20 rather than end up being stopped out at break even. So this was my point of interest, or where I wanted to take my TP before the order block was to be it. So if you come down to the 5 minutes, our stop loss was 2 pips, and I'll tell you how I was managing the trade. Actually, I came when the market was somewhere here, rather that my order was activated. So normally I like to take partials. The trade was overall I want to get to risk to reward, but being that I entered the market at around 3 in the morning, I would like, or as per my strategy, I normally like taking partials at around 9 or 10 in the morning. So during this time at around 9, I took a partial. You can see where we have this pink mark. That's why I took my partial at around 1 to 20, if I'm not wrong. Took my partial there at around 1 to 22 risk to reward, simply because of the time of day. I don't take my partials because of the PNL or the percentage return or anything. I use time of day to take my TP and my partials. So I took my partials there at around 22, that was 50% of my position. Then the rest I left to float till my final TP was it. My thought process during this time, after taking my TP, was either you could see a reversal or some sort of redist. This is what I expected to see from this, because there was an order block. I to see something like this, the market to go down, or alternatively this was to be a redistribution, or the market was to come and clear or ant the Asian eye, which is here, which exactly is what the market did. So guys, that was my trade, and you can see the risk reward was 1 to 32, which is not hard to achieve as long as you stick to your plans. Because if I had to take or to rush with the trade here, I will have not capitalized on the risk to reward that I had to receive. So far that was my trade, and that's all I wanted to share with you. You can see we had liquidity as well. These were confirmation for me. Trend line, all the retailers were willing and ready to buy at this zone. To extend the trend line a little bit, what do you think retailers were doing there? First touch, second touch, and come to the third touch, retailers were buying at this zone. For the third touch, maybe their stop loss somewhere here, but as an SMC trader, you know that these are liquidity grabs and those are pool of money. So market structure is so important. Look for the fair value gaps, the imbalance, the order blocks. If you are using the indicators, again, I don't have to comment anything on that, but you can try and incorporate the smart money concept. The order blocks is a new thing in this industry that is really rewarding. So till next time guys, you can share with me in the comment the videos you want me to produce. This will be my first technical analysis video, or top analysis video. In case you want to see more, you can check my Instagram page at BlackberryFX, that is somewhere here, BlackberryFX, or whatever. You can just DM me or put a comment down there and I'll be able to see. So till next time guys,